From AAAFx, this is Chris taking a look at the week for January 15th. So the first thing I'll do is look at the calendar, and the most important thing to keep in mind on Monday truly is the fact that it is a holiday in the United States. It is Martin Luther King Jr. Day. So all financial markets are shut down. It is a federal holiday, and therefore what you'll have is a situation where the market might have some movement early during the day, but then it'll just drop to nothing by the time the Europeans start to go home. With that, not a whole lot ahead of that people are going to be trading off of. So I would expect a relatively quiet Monday to kick off the week. That being said, it's not to say that there isn't a lot going on in the week. Tuesday has the unemployment claims or the claimant count change coming out of the United Kingdom. They are expected to have 18,100 people applying for benefits. If that's higher, that will be bad for the British pound. If it's lower, then obviously good for it. Later in the day at 1:30 GMT, we have Canadian numbers. Quite a bit of announcements coming out for the Consumer Price Index. That is going to have a major influence on what people think the Bank of Canada may do. Should play into the loonie. But at the same time, we also have the Empire State Manufacturing Index out of the U.S. That's more or less a stock market type of event. So we'll see how that plays out. It is expected to show contraction of almost 5. So keep an eye on that one. Wednesday has the industrial production year over year coming out of China early in the day, and it is expected to be 6.8. That gives you a general idea of the global economy. Remember, China is one of the major producers for the world for goods. So that obviously can carry into a lot of other markets as people try to discern what's going on in the global economy. CPI in the United Kingdom comes out a little while later, year over year, expected to be 3.8. This inflation number is important. Pay close attention. If it comes in stronger than anticipated, people may start to bet that the Bank of England is going to remain tighter than previously expected. As we go through Wednesday, we have the WEF annual meetings. Not really a market mover most of the time, but we'll see. They could release some type of announcement. 1:30, we have core retail sales and retail sales in the United States. This is almost decidedly going to be a Wall Street number, so watch the S&P 500, the NASDAQ 100. Dow Jones 30, probably not quite as much. Going into Thursday, we have unemployment numbers coming out of Australia, and that will have a major influence on the Australian dollar, probably not much more than that. Unemployment claims on Thursday at 1:30. The weekly unemployment claims in the United States expected to be 204,000. We'll have to see. They are expecting a little bit of an increase in unemployment claims, and quite frankly, Wall Street and the Federal Reserve wants to see more. The economy running hot, you want less employed people, so they stop buying things. Crude oil inventories could be an issue. We'll see. A lot of noise in the oil market right now, so that might be something that surprises some people as far as the movement that comes after it. On Friday, we looked at retail sales in the United Kingdom, expected to be down 0.5%. We'll see. They desperately need inflation to come down. This could help. And we round out the week with the University of Michigan consumer sentiment numbers coming out of the United States. By the time we get to this part of the week, it's pretty rare that has a major influence. But if it does influence anything, it's going to be Wall Street, as they may or may not be worried about inflation if it's very strong. But really at this point, we'll have to wait and see. I anticipate by the time we get to this part of the week, most people will be away from their desks, not really paying attention. Turning our attention to charts, the euro has been very noisy during the course of the week. And quite frankly, I think it is a lost currency pair. And what I mean by that is we just don't have directionality at this point. There are a lot of people that are pricing in the idea of interest rate cuts coming out of the Federal Reserve in 2024. And that, of course, is dollar negative. But at the same time, it can be dollar positive if we are going into some type of massive recession worldwide. So we have a lot of noise because of that. The 1.10 level above continues to be resistance. And of course, you have to wonder whether or not the ECB is going to have to bail out Germany. They are heading into a recession. So the ECB may be getting kind of quiet as well. So we'll have to wait and see. Over here, we have the gold market, and it initially fell a bit during the course of the week, only to turn around and show signs of life. The $2,075 level above continues to be a major barrier that we need to pay close attention to. If we were to break above there, then we have the possibility of a much bigger move. And at that point, I think it more or less becomes buy and hold. Underneath the $2,000 level, I believe, continues to be a major floor in the market. You can also pay close attention to the fact that we did form a hammer. That's generally a bullish sign, but we are at extreme highs, so expect noise. Silver markets formed a hammer. Let me get rid of the period separators. You can see it a little clearer, or a little clearer. You can see just kind of unchanged for the week, but that's a good sign considering we had dropped pretty significantly. This does suggest that we may rise from here, perhaps trying to get to $26. How long it takes, that remains to be seen. Bitcoin blew through the 47,500 level during the course of the week, but couldn't hang on to it. And this tells me, with the preceding hammer, that the market is going to kill time between 40,000 and 47,500. We're basically right in the middle of it. The ETF was announced during the week. That was the big cryptocurrency news. But quite frankly, that had been priced in. We doubled almost the price of Bitcoin before it gave up the gains. And when I look at the daily chart, you can see what the reaction was. We shot through the air, broke resistance, and we just fell from there. Again, I don't think it's the end of the bullish run. I just think that some people are taking their profit, and that does make sense once you've had that type of a move. Over here in Ethereum, very positive. It looks to me like the market is going to continue to look to the upside. Short-term pullbacks are possible, with 2,500 underneath being a little bit of support right along with the 2,400 level. I do not want to short cryptocurrency in general, and I think that Ethereum stands uniquely positioned due to the fact that it is the backbone for multiple other crypto ecosystems and coins and everything else. It's really not until we break down below $2,100 that I think this market looks like it's in trouble. Now, that doesn't mean that we can't have a negative weekend. And in fact, I would be really surprised if we didn't pull back some. But that should be a buying opportunity before it is all said and done. Dollar yen, all over the place during the week. It did break above 145. However, we fell from there and then bounced again. So I think we're probably going into a little bit of a holding pattern. It does look like it's trying to squeeze higher, at least at the moment. But if we were to give up about 141-ish, 140, that could send this market in a nasty downtrend. Now, we're 400 to 500 pips above there, so I'm not expecting to see that quickly. But it is something to keep in mind as maybe a way to define the overall trend. If we take out the top of the candlestick for the week, I think we go looking to 147 and a third, and then after that, 149.8. Australian dollar initially fell during the week, and it did end up negative, but it also shows signs of life right here in the middle of consolidation. I think at this point we are trying to sort out whether or not the 50-week EMA is going to hold as support and therefore keep the market in this range. Breaking above the top of the candlestick opens up the possibility of a move to 0.69, where we would see a lot of resistance. The 200-day or 200-week EMA sits just above there, offering a bit of a ceiling. If we were to turn around and break down below the 50-week EMA, that could open up a move down to the 0.65 level. In general, this is a market that I think is relatively neutral with maybe a slight, and I do emphasize the word slight, bias to the upside. Crude oil markets, well, they kind of look like the Australian dollar, to be honest with you. They fell during the week only to turn around and show signs of life again. $75 in the WTI market is significant resistance. If we can break above there, then we could go looking to the 50-week EMA, which at this point is right around $78.80. Underneath the $68 level continues to be massive support, and you can see that it has been important more than once. Brent markets have also pulled back rather significantly, only to turn around and show signs of life as we hover around the 200-week EMA. The $72 level underneath is a major support region that extends down to the $70 level. Crude oil markets have a bit of a problem right now, and that is nobody really knows what the demand is going to be. Granted, we do have a bit of an oversupply, but there's also a lot of upward pressure in the sense that people think that central banks are going to flood the markets with liquidity, and that generally spurs economic growth. But there's also the concern about the Houthi attacks in the Red Sea and whether or not that is going to completely disrupt the flow of oil. I think oil continues to be confused, but I do like the buy on the dip strategy, maybe not on the weekly chart, but perhaps on some of the shorter term charts. The S&P 500 did recover after initially selling off, but at this point in time, we still have a lot of noise above at the 4,800 level, which I think continues to be a bit of a barrier. When you go to the daily chart, you can see that Thursday and Friday were a little bit of a wash, so I'm not overly surprised if we pull back to the 4,700 level. That's an area that I think has support, and if we lose that, then we probably lose another 200 points, and quite frankly, I don't think that's a bad thing. This is still a very bullish market. It's probably overdone. Sideways or breaking out is what I would expect to see over the long term. Dollar Canada has rallied for the week to test the 50-week EMA. Pulled back a little bit, but it still looks like it's probably going to try to get to the 1.35 level, which I have as basically the fair value of the overall consolidation between 131 and 139. Keep in mind the Canadian dollar is highly sensitive to the oil market, so you'll have to keep an eye on that, obviously. I don't think oil is ready to break out. The dollar did rally against the Swiss franc at one point during the week, but it ends up closing rather uneventfully. We're still, on the monthly chart at historically very negative area. So we'll have to see as things stand right now. If we can clear 87, then I think the dollar could rally. But right now, in the meantime, I think we're just bouncing around. The DAX, very much like the U.S. indices, we're just kind of hanging around here. It looks like 16,500 euros is an area of support. If we break down below there, we could drop down to 16,000, maybe even 15,500, right around where the 50-week EMA is. I would rather see this market spend some time going sideways in the short term, building up enough interest, working off enough froth to have people jumping in. The FTSE 100 has fallen during the week. It held the 50-week EMA. Now the question is, can it take out the 7,800 level to the upside? That has been a rather significant barrier, but you can definitely make an argument that perhaps we are starting to curl to the upside. If we were to break down below the 50-week EMA, that could open up a move down to the 200-week EMA and ultimately the 7,200 level, which has been massive support. Over here in the Dow Jones 30, pretty sideways action as well. This is another market that needs to work off froth or hopefully even pull back. Something will happen to make it happen. We just don't know when. I am not going to short this market, but chasing it probably is going to be a bit reckless at this point as we've seen so much buying pressure. Remember, Monday is Martin Luther King Jr. holiday, so keep that in mind. British pound right around 1.2750, where we've been for about a month now. Not much going on here. We continue to bounce around between the 200-week EMA and the 50-week EMA. This is a pair right now that if you're a short-term range-bound trader, you've loved. Otherwise, it's probably pretty much putting you to sleep. I don't know that changes. The Nikkei 225 has broken out. At this point, it looks really strong. and it looks like we will continue to go higher. This does suggest that perhaps the Japanese yen might get smoked here shortly, because they do like a cheap yen in Tokyo to buy stocks. The 34,000 yen level is an area that I think will continue to be support as it was previous resistance. Target right now, I would assume, is probably somewhere around the 36,000 yen level. NASDAQ 100 weekly looks like it's threatening a major breakout again. Remember, the NASDAQ is traded based on about 7 stocks. So Microsoft, Tesla, that type of thing, Amazon, NVIDIA. If they're doing well, the index is doing well. I think at this point, you also have to keep in mind that Martin Luther King Jr. holiday is Monday. But I think if we get any type of dip, especially down to like 16,300, there will be buyers. Underneath there, it'd be right around the 15,800 level. A fresh new high, of course, means that people will continue to FOMO into this market. That's what the NASDAQ does. But this has been straight up in the air. And if Wall Street doesn't get what it wants, it'll be interesting to see how this plays out, because a lot of this has been based on the idea of the Federal Reserve cutting rates. The pound against the franc has been somewhat strong, but we still need to get above 110 to really prove ourselves. You could make an argument we're in the midst of trying to form a double bottom, but it's got some work to do to be truly comforting. So with this, I'm watching 110. Signs of exhaustion will probably get shorted. And here we have the US dollar Mexican peso tried to rally for the week, gave back the gains. The 16.62 level underneath offers massive support. So pay close attention to that. I think it is a situation where if we do break down below there, things could get rather ugly. Somewhere around the 1650 level is a massive trap door. If we break that, the dollar is going to get smoked and probably pull down to the 13 level. In the short term, rallies will more likely than not be selling opportunities, and that does make a lot of sense due to the interest rate differential. That's the headlines and analysis for the upcoming week of January 15.